everybody, I am Attila Tanner. Welcome to a brand new video of Nextdoc. I hope you're all doing well. It's been 3 weeks since the last video, so we are definitely due for an update. This is going to be the last video for this year. I want to also take the opportunity to thank everybody for watching me this year. Or if you're a newcomer, welcome, and hopefully we can continue to, you can watch the channel also next year in 2024. If you're new, I just want to give you a little bit of a heads up on how this works. As from Nextdoc, what we do is every 3 months, a company reports their results. We go to their website and get all the data that we can get. From that information is then fed into our computer program. With the press of a button, we will get an analytics of the situation and get a target rate for each company. And then we compare the target rate with where the stock price is at the moment. And then we can see if there is a good gains opportunities in the growth section and vice versa in the prices section if in case the stock price is higher than the target. So those things are what we report. Dividend and value stocks are something that we have access to anyways, so they are also presented. In the highlights section, I pick 8 companies that recently reported that I will showcase their target rates for. We are working on having all the target rates available to everybody on our website at some point. There will be an access to it. It's not ready yet, so I'm excited about it. So hopefully by 2024 next year, sometime in the first half of the year, we should have it ready, and then you can check yourself whenever you need to. All right, let's start with the highlights. Let's go look at some of the companies that recently reported. Adobe reported 12% year-over-year sales growth. Target rate for them has been increased to $473, but they're trading a bit higher than that at the moment. CRWD reported 11% year-over-year sales growth. Target rate for them has been increased to $39, so there's an upside for CRWD. Asana reported 18% year-over-year sales growth. Target rate for them has been increased to $38, so there's an upside for Asana. Salesforce reported 11% year-over-year sales growth. Target rate for them has been increased to $197, but they're trading a bit higher than that at the moment. All right, let's look at some other companies that recently reported. Crowdstrike reported 35% year-over-year sales growth, but target rate for them has been lowered to $119, and they're trading higher than that at the moment. NIO reported 44% year-over-year sales growth. Target rate for them has been increased to $13, so there's an upside for NIO. Oracle reported a modest 5% year-over-year sales growth. Target rate for them has been lowered to $107, and they're trading around that level at the moment. Snowflake reported 32% year-over-year sales growth. Target rate for them has been lowered to $114, and they're trading higher than that at the moment. All right, that's the highlights for this time around. Let's dive into the regular reporting. We start with the US market and the value stocks there. JP Morgan is on spot number 1, Exxon Mobil on spot number 2, and Tencent is re-enters the list on spot number 3. They have a $378 billion market cap with a price to earning of 14. Chevron, who was in the list, is out from top 3. In this category, we're looking at big market cap companies which also have low price to earnings. So those companies becomes more stable companies that you might want to consider for your portfolio. In the dividends, we have Verizon on spot number 1, AT&T is spot number 2, and 3M on spot number 3. Now, on the growth category, this is more sales growth compared to stock price growth. So Lee is on spot number 1, Rivian is on spot number 2, and Asana, as we just mentioned in the highlights, is on spot number 3 with their 18% sales growth, while the stock price was declining 21%. Unity, who was in the list, is out from top 3. Pricey ones, this is the reversed order. Basically, it's more that sales are either not growing as fast as the stock price is going. So Coinbase is now the new number 1. They move up 2 spots because their stock price lately has been going up very fast. Wish moved down to spot number 2. And Crowdstrike, as we heard on the highlights, is a newcomer on spot number 3. They had the sales growth, as I mentioned, 35%, but the stock price has been going down 21%. Now, Crowdstrike also has a very high price to sale ratio, and that's the reason they are kind of penalized in this list. Palantir, who was in the list, is out from top 3. All right, that was the US market. Let's go into the Canadian market. We start with the value stocks there. Royal Bank is number 1, TD Bank is number 2, and Canadian National Resources is number 3. Dividends in the Canadian market, Tourmaline Oil is number 1, Enbridge is number 2, and Algonquin Power and Utilities is number 3. Growth stocks in the Canadian market, First Quantum is number 1, Baytex Energy moves up to spot number 2, and they trade places with Orbi Global, who goes down to spot number 3. Pricey ones in the Canadian market, Great West Lifeco is on spot number 1, Power Corp is number 2, and Onyx is number 3. Onyx also has a high price to sale ratio. All right, this concludes the report for this time around, or this year, maybe I should say around as well. So thank you so much for watching. If you like this videos, please like and subscribe so you don't miss out on the next one, which will be next year. Next year, we will also start the videos by looking at all the indexes for 2023, how the TSX, the Dow Jones, Nasdaq fared. And we're going to also look at some of the picks that we had done and how they fared during the year. Meanwhile, you can follow me on NextStockYT on X. Whenever there is some news there, I will tweet it out or post it out. All right, always gather a lot of information before jumping ahead purchasing stocks. Happy holidays to everybody and Happy New Year. All right, until next time, bye-bye.